holding on to the positive territory along with the auto index, but it's the power index that is actually down in trade. It's 0.8% decline coming in for power index, as well as for the IT index, which is under pressure in today's trading session. If you look at the broader markets, both the mid cap and the small cap index are trading actually a little bit muted, with the small cap index in the negative while the mid cap index in the positive territory. Just to break it down with what are the companies, or which are the companies that are actually seeing an up move, it is, like I mentioned, Britannia and HUL are the top two gainers on the Nifty. Along with that, you have Nestle also that is seeing good strength. RIL is seeing an uptick of about 1% as we speak. Apollo Hospitals is also trading higher by about 1.5% in trade today, and we will talk about hospitals in depth in the BNS and Lens segment. But on the losing side, you have Adani Ports that's under pressure. Shree Cement is seeing some sort of a profit booking today. IndusInd Bank, ONGC, NTPC are the ones that are declining in trade today. But Vinny, like I mentioned, hospitals is the counter. Hospital as a sector is something that we are going to focus on. BNS and Lens segment. We've seen a sharp rally in most of these names and continuing the rally as well. Look at Apollo Hospitals among the top Nifty gainers today.
Absolutely, and the focus on this is coming in, after a lot of reports have suggested a slew of mergers and acquisitions that are happening here. Jefferies has released a note coming in as well, stating that hospitals have quite a good balance sheet coming in, the strength over there as well, and limited competition is something that could keep the valuations in check as well. To understand more on this, let's go across to Shrishti, who's standing by to tell us and talk to us about the recent deals coming in. What's the buzz coming in on the street as well? Shrishti?
Well, yes, Jefferies has come up with a very positive note on the hospital sector. On the back of that, you are seeing the stocks buzzing. What Jefferies is saying that the M&A activity in the whole space is seen to be scaling up. This is also being supported by the recent news flow, where reports suggest that Manipal Group is in advanced talk with Imami Group to buy out their Amri hospital chain within deal EV value at 1,500 crores. And another news flow suggests that TPG Group is in exit mode to exit their whole stake in the care hospitals, and the deal, the buyout candidates in this deal is Max Healthcare, KKR, Temasek are some of the names emerging, and deal EV value is estimated at 7,500 crores. What Jefferies is also saying that earlier when all these deals used to happen, then PE groups used to come in front, but now the hospital established chains and hospital companies are coming up to acquire stake and do this acquisition this way. Another factor for the hospital space is that the balance sheet is strengthening, because earlier in the past 5 years, if you see the net debt to EBITDA for all of these companies, be it Max, Fortis or Apollo, that used to be at 5x of multiple, which has now reduced, and especially when it comes to Max and Fortis, it has come below 1x, and Apollo is at 1.2x, so balance sheet has gotten strong. So this could cater to more acquisitions in the time ahead, and acquisitions will take care for the need of the speed for more growth that what the company is targeting, and this is somewhat in the commentary as well.
All right, thank you so much for that, Shrishti, for putting into context what exactly is happening in the hospital sector. A lot of buzz on that M&A, and earlier today we held a conversation with the managements of Narayana Health as well as Shalby Hospitals, and listen into what they had to say on what's exactly happening in the hospital space, as well as the consolidation and the acquisition plans for them.
Organizations will have different reasons for getting into expansion. So, for example, some hospital groups, if they're pre-IPO, they may want to bulk up just before they get listed. Some people that are just in the first phase of their private equity expansion will try to just add as many beds as they can. Those that are on the end of their fund life will try to, be conservative the way you said. But if I just speak for ourselves, the one acquisition that we made was adjacent to our flagship Health City in Bangalore. It fulfilled a very key requirement for us, which is being able to add orthopedics and trauma to our portfolio. And given that our goal is to build one of the best hospitals in Bangalore that's providing all the services, it made sense for us to acquire it at a pretty steep price.
A lot of hospitals are also looking at acquisitions at this point of time because, at least when I talk about Shalby, we are looking for acquisitions all the more so. Because our ROCs are back at the 15 to 17% level, and we do feel that we have an appetite, to make some acquisitions. The reason being that there are a few geographies which have been shortlisted by our management, which makes sense, and from the strategic fit, it does make sense for us to look at some of these acquisitions. Having said that, yes, over the last 5 years, there have been a lot of hospitals, especially we have been one of the youngest hospital groups because most of our hospitals are between the 3 to 5 year range. So, we did take some time to get these hospitals matured even before we look out for newer hospitals or acquisitions.
All right, so that's the word coming in from the management of Narayana Health as well as from Shalby Hospitals, talking about where they see the healthcare sector headed as well as the acquisition plans and the consolidation that's taking place in that particular sector. So let's talk more and in depth about what lies ahead for the hospital space. We are joined by our experts today. We have Saurabh Jain as well as Kunal. Both are joining us. Very good morning to you, Saurabh, as well as Kunal. Thank you so much for joining us on Buy Now, Sell Now. And Saurabh, let me kickstart with discussion by getting your views on the hospital space. We've seen a lot of consolidation take place in the sector. If not a lot of consolidation, at least the buzz on M&A is actually quite a lot. You've seen every single day you have some of the other news piece come out that hospitals are on the prowl looking at acquiring other players as well. Also, you've seen these companies also see a period of rally as well, be it Apollo Hospitals, be it Fortis Healthcare as well. Where do you see the sector headed from here on, and do you think it's a good long-term bet given that healthcare will never go out of fashion, right?
Good morning. I mean, the economics has clearly improved in the last 2-3 years, and a lot of big players, apart from the bigger cities, are now looking for investment in the tier 2, tier 3 cities. Things are getting quite improved over there, and now with the some companies are even opting for the inorganic route. I think this makes all the more things interesting. I mean, they would be able to fly, apart from doing all the greenfield expansion, the brownfield. Inorganic growth will take them higher in the days to come. This industry is expected to grow at a CAGR of approximately 8 to 12%, and in the bigger cities, the hospital Indian hospital comparison can be seen with the global standards, but there is a good amount of gap in the tier 2, tier 3 cities. So I am expecting that the sector would do well, and yes, one can look for investment in this sector.
Okay. Kunal, coming to you. Firstly, very good morning to you as well. And in the hospital space now, what are you looking at? Where do you see a further run-up coming in? Which stock? How are you seeing the overall sector now?
Good morning to you as well. And my belief is that these hospital stocks are getting into a mild breakout for themselves. For example, Apollo Hospital, the stock managed to break past about the levels of 4,400, which has been a huge resistance for the stock. And as can be seen on the charts as well, that the stock is coming out of a breakout of a downward sloping trend line, something which has been going on for the stock price since the last 8-9 months. So I believe that the first signs of a breakout has emerged for Apollo Hospital, and I think that could be a stock which I believe short-term traders could probably try and prefer from current levels. So yes, the breakout seems to be quite strong, and we believe that there is a potential that the stock may continue to move up higher, more in a trending fashion from here on.
The breakout seems to be very strong in Apollo Hospitals is what Kunal had to say. But on that note, we slip into a break on this edition of Buy Now, Sell Now. But when we come back, we will be back with your queries. So viewers, do write into us and we'll be back soon.
Co-powered by OLX Autos. Only OLX
continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market Well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy, only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
Welcome back. You're watching Buy Now Sell Now on ET Now. And Saurabh, let me first come to you. We've seen quite a lot of volatile trade in the markets. I mean, today, if you look at the markets, pretty volatile. How can retail investors actually protect themselves given the way how the market moves up and down?
See, I mean, there is a huge amount of volatility, especially after the central bankers have become hawkish in order to calm down the inflation. And today is no different. I mean, in the today's monetary policy also, the Fed is expected to be hawkish, considering the fact that they have before also they have said that the inflation is the topmost priority. Besides that, India is looking a bit immune to what is happening in the global arena. I mean, the way the global markets are falling, we haven't seen such amount of fall. And there are some sectors which are favorite of the markets. I mean, if you have stocks from these sectors, you make a good amount of money, and especially you can use this volatility and the corrections to your advantage. For example, the banking sector, FMCG sector, capital goods sector, to name a few, are doing pretty well. In fact, peripheral sectors like hotels are doing extremely well. So you have to be very careful what are you choosing from the market. I mean, what are you looking at? The sectors which are doing phenomenally well, and the money is chasing only those stocks. I mean, if you look at the foreign institutional investors or domestic institutional investors, you'll see that the shareholding of their ownership will continue to improve in these sectors. So you have to be at the correct side of the market. Apart from looking at the broader index, you must focus on these sectors to bet upon.
Okay, let's get started then with all the queries that you all are sending us on your stock. You all can send us your queries either on YouTube, Twitter, or on the WhatsApp number as well. And let me get started then with all the queries, and I'm going to come to you, Kunal, with the first query. We have a query coming in from A. D'Souza. This one is they bought Dishman Pharma at a price of around 145 rupees per share, which is currently trading somewhere around 103 is what they've said. Should they buy or sell this one?
Well, they can just hold on to the stock. I would not suggest an averaging out at current levels. The only reason for suggesting a hold is because in the last 2 weeks, particularly, the volumes have shot up significantly for Dishman, Carbogen. So that's a new name for the stock. So I think in that regards, the volumes have shot up exceedingly high. The prices somehow have fallen first, and then the prices or the fall is getting arrested at that 100 mark for Dishman. So I believe that the stock is now nearing a base. Now we just need to spot that whether there is a time-wise correction which also happens into the stock price. And if that happens, then probably timing the stock maybe a couple of weeks or maybe a month out from now could be a better time to try and average the stock from your higher level. So I would suggest a hold as of now.
All right, this next query that I have is coming from Nino, and Nino is asking about ICICI Bank, Saurabh. He's saying that he has ICICI Bank at an average price of 750 rupees per share, and he's adding whenever the price goes down. He's saying that investment in ICICI Bank is for the longer term, but he wants to know whether it's the prudent approach that keep adding ICICI Bank on dips, or should he look at some other banking names as well instead of only kind of parking his money in ICICI Bank.
He's doing all the things right. I mean, she has betted upon the sectors which is doing pretty well, and she's betting on the the marquee name. I mean, the leader of the banking system in the private space. ICICI Bank. If you look at the numbers in the last few quarters, if you see all the numbers, they have picked at all the right points. I mean, in terms of credit growth, in terms of managing their NPA, provision coverage ratio, profitability, everything is going right for them. This bank is going above industry average, and adding this bank to one's portfolio in all the corrections is the best thing one can do at this particular point in time. So from the investment point of view, I expect to in the next 2-3 years, the way she is doing investment in the ICICI Bank, I think she'll be rewarded handsomely. So my take would be that keep on doing what are you doing.
Kunal, this next query we have is on Dilip Bilkon. Chandan Jain from Karnataka has bought Dilip Bilkon at 1,150 rupees. Should they look at booking losses now or continue to hold?
Well, I would suggest to exit the stock. I don't sense any major revival coming by into the stock price. The last 3-4 months as well, it's been a very tepid kind of a bounce for Dilip Bilkon from the June lows, and so not an attractive chart. I think it's best that you try and exit such kind of names and shift towards large cap stocks. One of the flavors, at least in terms of the breakouts, which I'm spotting on the charts, is on the FMCG names. So it's the likes of HUL, Britannia, Colgate, etc., which are now looking quite strong. And I would be of the belief that many of these FMCG names should come back closer to their previous 52-week highs. So I think it's a good time that you park out money from such names like DBL and then shift on to large cap names and the ones which are quality, especially the FMCG names at current zone.
Okay, Kunal, this next one is coming your way. Maleshwar wants to know whether he can buy Adani Ports at current price of the short term.
Well, yes, you can look to buy Adani Ports at current levels, but then again, your time horizon would probably be more important over here, because there could be a possibility that the stock may stagnate at this 940, 950 mark. I think the last 4 trading sessions, there has been more of a juggle for Adani Ports at these kind of levels. But my belief is that the stock is now trying to establish a base. So 900 should be a support for the stock price, but I think closer to 980 could be a short-term target.
Saurabh, this next query we have is coming in for you. It's on MTAR Technologies. This one is from Krishan from Hyderabad. Want to know that if this is a good long-term bet coming in, and would you suggest this scrip? If yes, at what price, and what would be the stop loss?
I think the sector in this sector is not doing pretty well, and there is a good amount of correction coming in, especially when the interest rates have started going up, and there is a huge amount of correction in the coming up in the growth stocks. Apart from that, earning growth is also not matching up to the valuations that these companies were trading on. So I guess there has been some kind of a correction in the valuation also, but still I feel that these companies will not do well. Apart from that, the sectors which we have discussed in the show, for example, the FMCG, for the likes of banks and the capital goods, I think these are marquee names from these sectors would be good for the investment. So my take would be to exit from this stock.
All right. The next query that I have is coming from Hemanta Datta, and he's saying that he has Amber Enterprises, about 20 shares at around 2,200 rupees per share. He wants to know whether it's good long-term bet, and the long-term for him, Saurabh, is 2 to 3 years. Do you think Amber Enterprises makes the cut worth keeping in portfolio for the next 2 to 3 years?
I think the demand is expected to be very good in this festive season. Apart from that, there is a huge amount of correction have come in the commodity prices too, which makes a case for the margin expansion for the likes of the company like Amber Enterprises. So my take would be to keep on holding the stock.
Okay. Kunal, coming to you, the next query we have is coming in from Neha from Kolkata. This one is on defense stocks, that is BDL and HAL. Can they buy this at the current price for the 3-month perspective?
No, I think you should not jump into the trade, at least as of now. Yes, these stocks have done reasonably well, but may not be the best entry point for these stocks. And what could probably happen is that the stocks may consolidate and correct. And if this correction is a steeper enough correction, then you may see the stock falling by at least a 10 to 20% from their recent highs which these stocks have hit. So I think it may not be a best strategy to try and nibble into the stock at current levels. If you want to still look to invest, then I would suggest that probably look out for just investing maybe 20% of your expected capital which you're looking to buy the stock at current levels, and then wait out for a phase of correction. At least a 10% correction further from current levels could be a point where you can look to park in the remaining 30%, and a further 10% correction below that could be where you can deploy your remaining balance 50%. So that's how I think you should strategically try and use the dips corrections to try and buy this in the space.
Okay, this next one is coming in from Sunny, and Sunny is writing to us from Japan, and he's saying that he's a long-term investor. He's holding 700 shares of Dynamic Products, purchased at 465 rupees per share. He wants to know whether he should hold it or come out of it or buy some more on dips. What's your take on this one? Kunal, do you track Dynamic Products by any chance?
Not really. I don't track the stocks here, so won't be able to recommend.
Saurabh, would you be able to help our investor from or viewer from Japan on this one?
No, this is not in our coverage.
All right, then let me just move on to the next query then. Let me take this one coming in from Hemanta. No, I just took from Hemanta. This one is from Muttupalani on Amrutanjan Healthcare. He has 700 shares purchased at 922. Do you think that he should look to average at these levels, Kunal?
Well, yes, you can look to average at current levels. Again, it depends on what's your time frame, what's the risk appetite, and the construct of your overall portfolio. I think at 720.24 you can look to average the stock. Even if you look at it from a short-term play, I would expect 780 to be the first level of a bounce for Amrutanjan, and then assuming if the trend reverses, then you can expect the stock to cross levels of 840, 850, and then maybe beyond that as well going forward. So you have to take it in stages. You can average at current levels. Short-term wise, 780-ish could be a target for Amrutanjan.
That's a view on Amrutanjan, but let's move on. And Honeywell Automation, Saurabh, is the next stock. Now, Pushkar is from Bihar, is holding 4 shares of this at around 31,430 rupees per share. Could you advise if they can hold this for a long term of 2 through 3 years time period if they have?
Clearly, my advice would be hold on to this stock. The company is doing phenomenally well, and even the sector is in the brighter spot. So, because of the investment horizon is 2 3 years, so I, in my opinion, keep on holding.
This next query that I have is coming in from Leon, and Leon is asking about Geojit, 1,000 shares purchased at 50 rupees per share. He wants to know what's the future. Do you track this one by any chance, Saurabh?
No, it's not in our coverage.
All right. Then let me take this next one coming in from Madhuri, and 2 to 3 counters is what she wants for a short-term upside in the next 3 to 6 months. And she's also mentioned the counters, Kunal. So it's UPL, Balaji Amines, Aarti Industry, Polycab or Astral. Out of this, which one do you think is best poised for an upside in the next 3 to 6 months?
I think Balaji Amines could be an interesting chart. I think the stock is shaping up pretty well, but the only concern is that it's in a bit of an illiquid chart. So I think at 3,600 approximately looks attractive. There is a minor breakout in the offering for Balaji Amines. But then if I have to recommend another stock to you from a short-term view, then I would recommend Britannia or HUL. Either of these stocks at current levels. My sense is that the FMCG stocks are going through a big turnaround. And if that's the case, many of these FMCG stocks can stand to rally by approximately 5%, if not more, in a very short-term kind of a time span. So I believe that those could also be a better alternative. Balaji Amines from the list which you mentioned is what I would recommend.
Okay. Kunal, I'm going to come back to you. We have a query coming in from Rekha from Chennai, and this one is on Tata Chem futures. Can they look to buy this today is the question coming in.
Well, I would not recommend a buy immediately. I think the stock has not come back towards a support point. And more importantly, Tata Chemicals, it tends to perform in the best of the market trends. So when the markets are into a breakout mode, the stock gets into a breakout. When the markets consolidate, we've seen Tata Chemicals also get into a consolidation. Look at it this way, that from the second week of August till now, so far, the stock has been stuck into a 100-point range. 1,060-70 is the base, and closer to 1,150 is the resistance for Tata Chemicals. So it's been stuck into a range, and when you look at this with respect to Nifty as well, Nifty has also been stuck into a range. So I think in that regards, it may not be a best time to try and buy the stock. 1,060 could be a better point to buy Tata Chemicals.
All right, so that's the view coming in on Tata Chemicals. But on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. But when we come back, we will be coming back with your queries. So don't go anywhere.
आग को फैलने से रोकना मुश्किल है.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years,
Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's keep it going then with all your queries. And Kunal, coming to you. First one is a short-term query coming in from Chitra from Bangalore. Wanted to know the targets for Bombay Burma and Gujarat Gas.
Well, I think Gujarat Gas, I would be of the belief that the stock is trying to struggle. It's not showing any major signs of consistency. Depends on where you've bought. If you're looking to buy at current levels, I believe you can just give a short-term target, maybe a 785, 790 could be a near-term target for Gujarat Gas, but then the stop loss would also be closer to 720 mark. For Bombay Burma, I would be of the belief that the stock is, is not yet hit the support point where you can look to buy. So maybe a 1900, a 900, 920 could be a good zone where you can look to buy Bombay Burma, not at current levels.
Okay. Saurabh, coming to you, then we have a query coming in from Rabin Chatterjee. Now, this one is on a couple of stocks. One is Shoppers Stop. They're holding Shoppers Stop at 747. Other one is Maruti. They're holding it at 9,370. So, what should they be doing with this? Should they continue to hold this? What's the view?
I think coming on the Maruti, I think it is a good company to hold on your portfolio. There has been a correction in the commodity prices, so it will give a margin fillip. And also the company is having a good amount of order book, and there is a new some of the companies also going to introduce new models in the CNG variant. Demand is expected to be good, and the company is enjoying higher market share. So for the next 2-3 years, auto sector is looking good to me, and the betting on the Maruti is extremely well. My take would be hold on to it. With respect to the Shoppers Stop, I think with the festive season going to start, I think this company's the numbers will improve in the third and fourth quarter, so it makes sense to hold on to it.
Kunal, this next one is coming in from Dev from Chennai, and it's on Ultratech Cement, holding 15 shares of Ultratech Cement at an average price of 6,896 rupees. Should they continue to hold or sell this? And if they sell it, then should they start accumulating ONGC?
See, I would not suggest to sell the stock at current levels. UltraTech Cement and the entire cement pack has been doing reasonably well. But, in the same light, I would also not suggest to average out at current zone because, for example, I was looking at the monthly charts for UltraTech Cement. The MACD has not yet crossed the breakout point, and that I believe could probably take at least another couple of months for the stock price. So I would suggest to wait out for possibly another month or so. And if the stock happens to break past about that 6,800, 7,000 barrier, so even if you're buying at a slightly higher levels, but then that would be on a confirmation that a new trend has begun for UltraTech Cement. So I would suggest to wait out and hold your existing quantity as of now.
All right, the next query that we have is coming in from Indumati, or rather, she's asking another query altogether. Okay, this one is from Sudeep, and he's saying Karnataka Bank seems to be in an uptrend. Finally, he already has 2,000 shares at a price of around 117 rupees per share. Now he wants to know, is it a good time to average or add some more? He wants to hold on for the next 2 years. Do you think that it makes sense, Saurabh, to stay put with Karnataka Bank because there is an uptrend right now?
I think it is not the best bank to bet upon considering the financials of the bank. I think the best bank would be for the likes of in the PSU category, the Bank of Baroda, or maybe in the private space, ICICI Bank. So for the next 2-3 years, I think these banks will do extremely well with strong balance sheets.
Kunal, this next query we have is coming in from Adarsh from Kolkata. Want to know that if they can start buying Mahindra Holidays at the current price?
Well, not at current price, but then I think Mahindra Holidays should be a part of your, I would say, a bit of a sector portfolio from the hotel space, etc. I think so. It's been doing extremely well. The entire hotel space has been buzzing quite strongly. And I believe Mahindra Holidays could be a stock where you can look to buy. But then I think price-wise, I'm not comfortable because the stock has reached to a point where it's given a breakout and then it's come back again, retracing from the breakout. So such kind of trades, they generally come back to their support points. That would be closer to 270 mark for Mahindra Holidays. So I would suggest to buy possibly another 10% lower from current levels.
Okay, let me just address the flashes on the bottom of the screen. Is the Russian President Putin, who is actually addressing the people there, and he's saying that Russia is going to take necessary steps to defend their sovereignty, and also saying the military operation goals remain the same. Also, you have media reports indicating that Putin has announced partial mobilization. So that's the latest that is coming in from the Russia-Ukraine front, and the marks on your screen. But let's shift focus, and let me take the next query then. And the next query that I have is coming in from Madhuri. Madhuri is taken. This one is coming from Neha. And Neha is looking to buy RHI, Magnista and City Union Bank for trading purpose. 2 to 3 months is her view, Kunal. She is asking, does it make sense? Is it the right strategy to take, or what sort of a strategy rather she should take for this? Buying at these levels or at a dip, or should she look at something else altogether?
So RHIM, that's RHI Magnista, as well as City Union Bank, both the charts are attractive. But then there's one distinct point which I think you have to look out for, at least when I look out for when I look at the charts. For example, for City Union Bank, the stock has been unable to break past about that 190, 195 barrier convincingly. So there have been two big attempts for the stock price. I think one was in the mid of August and the second would just happen today. But the stock has failed to cross over those levels, which means that there is a bit of a resistance for City Union Bank and the stock would consolidate over here. So it's best that you try and position at lower levels. So maybe a 175 could be a better level to enter City Union Bank, and you can expect that even if the stock consolidates, you can probably try and get a 10% profits from 175 to 190 plus. For RHI Magnesita, the stock has run up exceedingly high. 700 is where the stock is trading right now. I would believe a much better entry point for RHI Magnesita would be on retracements when the stock comes back towards its 50-day moving average, which should be at least 20% lower from current zone.
Saurabh, this next query is coming in from Vincent from Bangalore, who's a long-term investor holding M&M Finance at 3,000 shares at 190 rupees per share. What's the long-term fundamental view on this?
I think agrarian economy is expected to do well. The company is doing all the right things and quite hopeful for the credit growth in the next half of the year. So, in my opinion, he can hold on.
All right. Okay, actually, we will have to wind down on this edition of Query segment right now. Thank you so much, Kunal, as well as Saurabh, for joining us on the show. And viewers, I know you've written to us. A lot of queries are actually pending with us. But due to paucity of time, we'll have to wind down the query segment right here. But we will be back tomorrow and we will take all of your queries then. So please don't be disheartened. But for now, we will slip into a break on this edition of Buy Now, Sell Now.
May cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And Railways is coming up with a mega tender for railway tracks this month. ET Now has learned from sources that the tender will be to encourage domestic companies under the Make in India brand, and they will also be assured of